What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about the brutal bloodbath that we saw today in the markets while we wait for the CPI data report. And today, as usual, on Tuesdays and Thursdays, I am going to talk about the markets with my friend Mario. What's up, bro? How are you?
Hey Alva, thanks for having me.
How have you been? Good?
Not bad, man. Doing
Working,
going doing
working a
good
lot,
so
I
far.
guess. How's your
It
How's your
is, man.
patron doing? Your YouTube channel? You're working a lot, right?
Not bad, man. Not bad at all. Like since it's been a range bound market for a while,
Correct.
I've just like producing a weekly videos for now. So for today, we broke the range, so
Oh yeah.
it's gonna be
I mean,
interesting.
the bull flag pattern was invalidated today
Yep.
on both S&P 500 and Nasdaq 100. By the way, guys, remember down below you have the links in order to have access to Mario's Patreon and Mario's YouTube channel. Go ahead and check it out. I belong. I already signed up for his Patreon, and there is a lot of value on Mario's Patreon. Bro, we have a lot to talk about today. So today we had a worse than expected jobless claims report. It
Hmm.
came out at 229,000 new claims versus 210,000 estimate. So
Hmm.
this is the highest level in 5 months
Hmm.
for this report. So apparently, the job market is starting to weaken, which is something that the Federal Reserve is looking for, even though they cannot, say it openly. Tomorrow we have the CPI data report. This is going to be the most important report that we have gotten so far this year, Mario, by far, by a long shot.
Yep.
I
That
think
is
that,
true.
that, that the CPI is even going to be more important than the Federal Open Market Committee, which is, by the way, taking place next week. So, the European Central Bank didn't hike interest rates today, but they stated that they are going to hike rates anytime soon. So that also put downwards pressure over the European markets.
Hmm.
Oil has been going up for 7 months in a row, Mario. Unbelievable. So the national average gas price is sitting as of now at $4.97. Absolutely crazy, right? So we have a lot to talk about before we go over some stocks and over the SPY and the Triple Q. So what do you think about the jobless claims report? Do you think that this is positive or negative?
I mean, people are losing jobs, man. It is negative, but the demand is slowing down,
Correct.
and which is expected.
Which is
And
positive, right, for the stock market. And I mean, I don't want
uh,
anyone. I mean, let me rephrase that. I don't want anyone to lose their job, right? I
yeah,
mean, let's just put it that way. Obviously, right? I want everyone to work, but
hmm,
as of now, we have an imbalance
yeah,
between the amount of jobs that are available and the amount of people that are willing to work. So
hmm,
the other day, Jerome Powell said that we have 2 jobs available per every one person. So that's an imbalance.
hmm,
If the if the job market happens to slow down a bit, no one is going to complain about that, and that's one of the objectives that the Federal Reserve is after, right?
hmm.
Because that is going to imply that that demand is also going to slow down. If demand slows down, that is going to help inflation-wise and so forth. So, do you think? So, bottom line, this is negative. We have more people filing for,
Jobless claims.
yeah, for jobless claims, or for this. This is an insurance. Let's just put it that way, right? When you lose your job,
Hmm.
but when it comes to the economy and when it comes to the stock market, what's your opinion on this?
All right, so I want to start with what happened with Tesla like a few days back, where they
Correct.
laid off like 10,000 employees. I am expecting the same thing to happen to follow on with all the other companies as well, leading into the future.
Hmm.
So, because inflation is biting into their profit margin, and but
Correct.
they got to keep it. They got to keep their profit margin. During the 2021, when they are hiring a lot of people, they gave away shit tons of raises to everyone, and right now they're facing the impact. So right now the layoffs will follow. A lot of people will unfortunately lose their job leading
Unfortunately, we,
into.
we, we can highlight that, yeah.
Yep.
But
leading
but you know,
into
Mario,
upcoming wave.
if you have a lot of people losing their job, but yet still the labor market is strong enough, then they might be able to find another job quickly, right?
No, that's the problem, right? Like labor market won't be strong enough like it was before in 2021.
Correct.
So because the companies are not going to hire anymore, they're not going to hire new people anymore because, as I said, inflation is biting into their profit margin. They can't afford to pay the employees like they used to pay before, right? So that is one
So
problem.
so you see unemployment going way higher.
Yeah, of course, 100%, 100%. It
So
is
that's
going to
and
happen.
that's good for the stock market, obviously, because that is gonna. I
Unfortunately,
mean, that is positive, um, from the perspective of the Federal Reserve. If unemployment happens to go way higher, we are sitting as of now at what, 3.6%. That was the last reading, right? So say that unemployment goes up to 5 or 6%, then the Fed is going to think about is going to have to think about, you know, slowing the pace, or maybe stop hiking rates, maybe by the end of this year, maybe by next year. We don't know. So for the stock market, unfortunately, sometimes bad news is good news, and I think that this is the case, right? From
all
a
right.
stock
So
market perspective.
why do you think so, though? Like, if the employment, people are losing their job and companies, and we are like, see, this is the problem. Like, let me rephrase it.
Yeah.
People are losing their job. Companies putting a hiring freeze is actually good for their profit margins when you talk about the company's perspective,
Yeah.
right? Less people they
Then we
hire.
have the issue of productivity, but let's don't get into that rabbit hole right now, right?
No.
Because
What I'm trying to
you
say
can
is,
fire people, right? But
yeah,
if your company is still producing the services and goods that you need to produce,
yeah, you
then
can.
that's a win for the company. But you have more
Yeah.
people being unemployed, which is negative
No.
in social and economic
That's not.
terms.
I'm not talking about socioeconomics. It's about the stock market in itself, right?
Correct.
So if you run a company and if you fire a lot of people, it's good for you because you don't have to pay a lot of people, right? It's good for your profit margin,
Yep.
top line and
Correct.
bottom line and everything, right? So this will happen. So, but we are still having higher inflation just because like people lose their job doesn't automatically mean that inflation is going to come down any further. What Federal Reserve is right now trying to do is like just holding on until the job market just like, people corrects themselves, like companies starts firing people and all those stuff happens. But how is that going to impact the food prices? How is that going to impact the energy prices? Like I don't see the
Yeah, I
correlation
mean
here, but I do get your point. The demand reduction means
correct.
inflation coming down, but what if it didn't help?
No, I mean maybe we need. I don't want anyone to starve. I'm just saying, obviously, I don't want anyone to to lose his or her job. The point that I want to get across here is that the Fed wants the economy to slow down, and apparently
Yeah.
it is happening. Yesterday we found out that mortgage demand fell to the lowest level in 22 years. So that's another positive sign, Federal Reserve wise, and then we can also make the case, okay, but that's very negative for people that sell houses because they won't be able to sell their house, or people
No,
that work
but
in
the problem is,
that work in
but
the
the
business. But
but the
the truth of the matter, at least from what I see it, Mario, is that the Fed wants to slow the economy, and we have some encouraging signs that the economy is starting to slow down. And yeah, no, go ahead.
yeah. So what I'm trying to say is, even though the mortgage rates are coming down, the prices of the houses are not. Like if you see the housing data, the house prices of the
Yeah,
houses are still going higher,
but
even though
they
the
will come
demand
down,
is
Mario.
slowing.
We have lumber prices have been coming down a lot, and if demand comes down, eventually that is going to bring uh, house prices down eventually. I don't know when, but I think that we have a fall in demand. We have also lumber prices coming down, and this is going to end up bringing the prices of houses down. I would say anytime soon, in my opinion. Oh, and on the other hand, and let's talk about the CPI data report that is coming out tomorrow. So we have a bunch of signs in the economy that seem to be that seem to be going in the right direction, right? Like the prices of semiconductors have come down, lumber, copper, stuff like that. We have, as I just told you, mortgage demand falling to the lowest level in 22 years. Today we got a way worse than expected jobless claim report. But on the other hand, oil prices, bro, absolutely insane. This is this is insanity to the core. I just told you, Mario,
100%.
and this is the reason why I am very skeptical and actually negative towards the CPI data report that is coming out tomorrow. So oil has been going up for 7 months in a row. The national average gas price is sitting at almost $5.
Yeah.
Did you watch the interview of this senator from Louisiana, John Kennedy? He
What did he say?
if you didn't see the interview, hold on. So he said yesterday that it is cheaper. We're talking about a senator of the U.S. He said that it is cheaper to buy cocaine and run everywhere relative to gas up your car, man. We're talking about a U.S. senator that said that you should buy cocaine and run everywhere instead of gassing up your car, man. So this issue is
my
getting
days.
absolutely out of control. So tomorrow we have the CPI report coming out. So we are expecting a year-over-year increase of 8.2%, month-over-month 0.7%, and core, which is the most important reading at the end of the day, at 0.5%, right? Okay,
Yep.
so core CPI is very tricky, Mario, because inside core CPI we have public transportation, and we have also flight tickets, correct? Which are two categories that are very affected by gas prices.
Yeah.
So what do you think, Mario? Is it gonna be that? Is that report going to come out like way worse than expected? Even though we are seeing some signs, that the economy is kind of slowing down. What do you think?
It's like a domino effect, right? So when the oil prices or gasoline or energy, diesel, they go up, any other sectors which are
Yeah, it
dependent
affects
on the
everything.
oil, it's gonna affect them as well. So that's the reason why last CPI was kind of weird, because in last CPI energy was down 11%, just so you know, but we still got an inline reading.
Yeah,
But this CPI, it's not. The CPI gas is about to
dude,
new all-time highs. It's like,
the Brent closed today's trading session at $124. This is insane, bro. And I don't want to get political here, but we have a war in Ukraine, which is the main reason, why oil is so high. And unfortunately, and I don't want to get political here. This is not a. I mean, we know that the stock market is absolutely linked to politics. I mean, we all know that. But bro, we have the U.S. government backing up Zelensky like 100%, and we have a war in Ukraine. And I think that while we don't have peace in Ukraine, for the most part, Mario, I don't see any reason for oil to come down. I mean, yeah, we can make the case that that if oil gets up to $140, that is going to create demand destruction because people are going to be using less their cars and stuff like that. But I don't see a strong reason for oil to come down. So we are in some sort of dead end over here, Mario, and I think that the markets are wondering. The markets are curious about the following: can the Federal Reserve bring down inflation by hiking interest rates? Just like they have always done, with a war going on in Ukraine, or is the war in Ukraine going to condemn the world to have very high prices of gasoline and oil, and if that happens, like very high inflation for I don't know what 2 or 3 years or 5 years. So are we heading into a, let's say, secular inflation problem in the world because we have a war in Ukraine?
all right. So there are a few things which I wanted to touch on in this topic, right? The war in Ukraine, or whatever it is, like that might be one of the catalysts for gas prices to go higher. It literally amplified it, but that's not the only catalyst. right? We have been having an increase in energy prices from $1.99 all the way to like $3.49, even before the war in Ukraine started. The war in Ukraine, of course, got the gas prices from like $3.49 to like $5, which you're having right now.
So yeah,
But
we're talking about $2 more, Mario. So if
yep,
gasoline, if the national average gas price were at $3, we would have a completely different situation when it comes to the CPI that is coming out tomorrow. So Putin gave us a $2 increase when it comes to gas prices on average. When it comes to gas prices in the U.S., that's a lot. So this is it matters. This is serious business, right?
I mean, yeah, like what I was trying to say is it is important, like it is important to cover on it, but all Putin did was to like poke the bubble, which is already inflated. So he is one of the major reasons, but he's not the only reason.
Yeah, obviously.
And it all started with the monetary policy of Federal Reserve at the end of the day. But even though like you can say that gas prices are not linked to the Federal Reserve and Fed doesn't control the policies and all those things, but it is like a series of mistakes which led to this situation right now. Series of mistakes by the government, series of mistakes by the Federal Reserve, and then bubble pop came, and then like we are in the situation right now. Backing up Zelensky or not, like if they want to do a proxy war or if they want to like get hero points from the American public or whatever it is, it's on them. But at the end of the day, it's not them who is suffering, it's us, right? It's the general public who's suffering at the end of the day.
So
I mean,
solidarity with Ukraine is very expensive, Mario,
yeah,
and
it
all of
is. It
us,
is.
and we all are paying for that solidarity.
Yeah, it
And
is.
we
Like,
weren't asked about that subject, Mario, because we are taxpayers. We gas up our cars, and I don't want to get political once again, but no one asked me like, "Hey, man, are you willing to pay way more money to gas up your car because we are going to be, because we're gonna be backing up Zelensky?" So I don't know. This is a very
I
polemical
mean,
subject.
bro, it's
Needless
not
to
even
say, right?
political as well. It's just like it doesn't matter how good of a person you are. Once it starts hurting your pockets and it starts hurting your family,
Yep.
the first person you'll be looking after is your own family rather than someone
And
else,
mind
regardless
you,
of.
the sanctions against Russia, I mean, I don't think that sanctions are working out the way that they were expected, to work
Of course
against
they're not.
Russians, right?
Of course they're not. Like,
So,
bro,
the Russians are still exporting their oil to India and China, and then and then India is selling us gasoline and
they're
oil
still
derivatives.
exporting it to
So,
Europe. They're still exporting it to Europe. They're still exporting it to Germany. Like, it's still going on. Like,
yeah.
I don't think it doesn't do anything actually. Like, it's just hurting the American public and it's just
Yeah.
hurting the European
And the
public.
European, correct, correct, correct.
It's just nonsense, man. Like, I don't want to get more deeper into that, but I just,
Yeah,
I mean,
it
I
is a
lost
very
all my trust
it is a very
already.
polemical subject. Maybe I mean, if tomorrow, Mario, I think so. I mean, you know that I am a bull. I always like to see things glass half full instead of, in a very negative way. So
Mhm.
maybe if tomorrow we happen to have a way worse than expected CPI data report, which is in the cards, it's in the cards. We could have a nasty, nasty, nasty report. Maybe
Mhm.
the U.S. government could say like, okay, I need to review my position towards Ukraine, and maybe I need to, force Zelensky to negotiate. I mean, you
You think
laugh.
so?
I don't know. I just want to see things glass of full, right, or here. But okay, your forecast for tomorrow, nasty report.
Of course, bro. Of course.
Okay,
Like, I mean, I'm not expecting any better.
okay.
As I said, last month we had 11% drop in CPI and we still got an inline print. But I'm not expecting anything good of the CPI tomorrow. It's like whatever
Gotcha.
happens, it's like I'm ready. I'm just like, okay, if you're gonna dump hard, I don't care.
All right. Okay. Okay, Mario. Let's go over the technicals. So, what are you looking at when it comes to the SPY and the QQ and triple Q? Unfortunately, today, the bull flag pattern that we saw for the last 8 trading sessions was absolutely invalidated. So, what do you think is going to happen if we happen to have a better than expected CPI data report, which is very unlikely? And what do you
Um,
think is going to happen if we get a worse than expected CPI data report, which is the most likely outcome tomorrow, right?
To be
Take
honest
a
with you,
look at those candles into the closing bell. Take a look at the
bro,
value, Mario.
unbelievable.
So sellers show up, bro. Huh?
Oh yeah, I mean, bro, see, this is pretty simple, right? We tested for 416,
Yeah,
we tested 416, we tested 416,
yeah.
and we tested it
Critical
again.
spot.
With CPI on the line, buyers was like, yeah, you know what, fuck this, I don't want to do this anymore.
Yeah.
It's done.
So, oh,
Continuous selling.
so let's see. Nasty CPI. Where are we heading to, according to your opinion?
All right. And if market reacts, I mean, it's going to be a nasty CPI, but we're going to talk about how the market might react, right? So
But I
if the
think, Mario,
market
if we happen to
opens,
have a nasty one, let's say that we get 0.9, this thing is gonna collapse
most likely.
with a very negative CPI. You can make the case that the market's already priced in, that the market's kind
Nah.
of already priced in a nasty CPI with the drop that we saw into the closing bell today. That's a possibility. But if we get a very very nasty CPI, then I don't know. You tell me, what do you think?
All right. So if we gap down tomorrow below 397,
Okay.
say hi to 395 or say hi to 390. All right. We
Okay.
can easily see 390 by tomorrow's close if we gap down below 397.
Yeah.
That is. But
Correct.
the best case scenario, if you want to go short, is waiting for the market to have a gap up tomorrow all the way to like $407, which was the bottom of the range, which we have been having for the past 2 weeks.
Preferably as soon as the
407 to
trading session
417.
opens. That would be a bull
Exactly.
trap.
Mhm.
Correct.
If we open anywhere above 400 and bull starts pushing to 407, that's where, and we got a rejection over there. That's where
that's
we
your
go
short
short.
signal.
Yeah,
Absolutely.
and then if we get rejected there, if we still have 180-hour move, we can close the day at 397.
Correct. And mind you, and this is very unlikely to happen tomorrow, right? If we happen to have a better than expected CPI report tomorrow, or CPI data report, this would be the greatest bear trap ever, like ever,
Technically.
because we saw crazy puts buying into the closing bell, a lot of puts out of the money, especially on IWM and the SPY. So that would be epic. That would be absolutely epic. Like, panic, short current. Okay, if that were to happen, Mario, if we have a better than expected CPI data report, if a miracle occurs, what do you think would happen here?
Nothing much. We are just going to go back into the range.
Okay, back
That's all.
back above
Back at
407
407 to like 416. If we open above 407, yeah, back above the range, 416 is back in table. That's all it's going to happen. It's pretty simple.
Or we could also see a massive short squeeze, in which case maybe
Yeah,
the
2416. Yeah,
Correct.
2416.
Correct.
That's what I'm saying.
Okay.
So because like if we open above 407 tomorrow, for some god awful reason, they cooked a good CPI data, and we go above 407 and open above 407, we can easily run a test to 416.
Okay, which is the spot in
Top
which
of
we
the
have
range.
been failing over and over and over and over again. Correct.
Top of the range again.
Triple Q, Mario. What do you got over there?
It's the same price action. I'm pretty sure they violated the range over there as well.
I mean,
And yeah, close below 300. Yep,
Correct.
bad. So if like same price action as SPY, it was trading in the range between 302 to like 313 to the upside. So if they open about 302, the possibility of them running a test to like 304.96 or like 309 increases, and which again puts us back in the same range which they have been trading on if we receive any of the good news. So that is the maximum pain, by the way.
Yeah, the bulls failed at 312 like on multiple occasions, right?
Yep, a lot of times.
So maybe
they broke above it and then like gapped down.
Yeah, but they couldn't hold that support. So it's been a nightmare. So maybe if a short squeeze happens to occur, we could see the bulls maybe taking on 312. Correct.
312. Yeah, I mean it just puts us back in the range again to like square one, and we're gonna see again. We're gonna wait for another I don't know how many months or how many weeks in order for the range to get violated again.
All right. So maybe we could get back up to the bull flag if we happen to have a better than expected report, Or maybe
I
if
mean,
we,
if we, to be honest with you, we're just doing the IWM, what IWM did in 2021.
Mhm.
Like it didn't move at all, trading flat for the entire year.
Yeah,
So that is still
yeah,
in
it
cards,
stayed
by the
within
way.
a range. Yeah,
Yep,
it was, yeah, it was a,
big range.
yeah, it was a
That's a
big
big
range.
range.
Correct, a bigger
Yep.
range. Correct.
Mm-hmm.
Exactly. I remember that. Okay.
Mm-hmm.
Mario, let's go ahead and take a look at AMD, Advanced Micro Devices. They announced
AMD.
today into the closing bell that they see the personal computer market going down this year.
Oh
So we got
wow.
a negative catalyst into the closing bell that might affect, arguably, AMD tomorrow. Who knows? So
They're actually
what do
up.
you see in the case of AMD?
They're actually up after hours, by the way. And if they go down tomorrow, watch out for $97 to act as support.
They close
97.94.
below $100, right? Which is a big
Yeah, they
support.
close below 100. Yep,
Yeah.
they close below 100. So if they're not opening above 100, watch out for resistance at the round number at $100. And they might go all the way down to like 97, 95. But with the ATR at AMD, I won't be surprised if you have a bearish day. We can go all the way to like 94 or even $89 down south.
Correct. Correct. Perfect. Apple. What do you have in the
Apple.
case of Apple?
Let's see. Oh, we lost 144. Wow.
Yeah, that's a big support. Then we have what 138, I think, right? Or 139
Yep.
as support.
Mhm.
139.
Yep. That's the next one. So if we open below 144 on Apple tomorrow, with the Nasdaq pummeling down, we can easily see 139 or 138 in Apple then coming, testing the lows again, most likely. Let's see. Do we have any other nah, I don't see any other support for Apple over there, like other than the lows. We had one at 143, we violated the range. Most of these stocks mirror the SPY and QQQ. Like as we know, Apple being one of the biggest holding, SPY lost its range, QQQ lost the range, Apple lost the range. If SPY drill down further,
Yeah,
Apple is going to drill down further as well. Like we are going to go to 138 or
the price
139.
action into the closing bell was horrible.
Yep.
Today we had an ugly
Absolutely.
close. Oh,
Yep.
very ugly close. Very ugly
Mhm.
close. The only factor that could save the bulls tomorrow would be a better than expected report, or maybe we can make the case that the drop that we saw into the closing bell, was the markets pricing in an inline report tomorrow, and then maybe we can see a green day tomorrow in order to get back in the range that we have been trading in, the horizontal channel for that matter that we have been trading in for the last 8 training sessions. But that's something that we don't know, that we cannot tell for sure, right? So
Yep. So we got to wait and watch.
most markets participants are thinking in terms of downside rather than upside tomorrow, right? And the nasty close that we had today confirms that situation. Nvidia, Mario.
Nvidia, same as AMD, the semiconductors are getting pummeled. Pretty
Absolutely
sure
killed.
it had. Oh, all right, another ugly day. Well, at least Nvidia is looking not
We
so
have
bad.
170, right, as the next support over there.
Yeah, we have 180 as the round number over there, and if we break 180, then we are going all the way down to like 177 is another small support over there. If not, with 180 or more considered, I won't be surprised if Nvidia tested the lows at 160 or something. So let's see how it goes.
That would require a bloodbath.
Yeah, because
in
like
the markets, yeah.
Yep. So this breakout candle highs, you can see the highs at $180. If we violate that and open below that, watch out for 175, give or take. Below that, we are coming all the way down to test the lows at 160, provided QQQ.
I would be a buyer at $160 in Nvidia. I mean, unless we have a horrible CPI report. But if we have a normal report and Nvidia, and tomorrow the markets collapse and Nvidia sees $160, I want to be a buyer. I would be getting probably leaps or something like that. So I would be a buyer at that price, even though we are talking about a horrible and terrible chart. So I'm not going to be buying, weekly calls of Nvidia. I would be buying a leap maybe at $160. Amazon, bro. We thought that Amazon was going to go higher. No.
It did.
We were mistaken.
It did go higher though, didn't it?
I mean, the first day it was a pump and dump. So Amazon is trash for the markets right now, Mario.
The trend is always your friend at the end of the day, isn't it?
Oh yeah, the trend is the
They
dominant thing,
couldn't.
man. We have declining
Yep.
moving averages. We have a clear downtrend. So the trend ended up being the dominant thing.
You
Absolutely,
see
man.
this line which I drew? This was drew before the split happened. This
And they
was
failed
the
right over there,
highs.
right? Yeah.
Exactly, like because like I've been keeping a close eye on it. They did try to break above it. I was expecting them to go to 130 to fill that gap, but they couldn't even go over there. That was a warning sign for me. Doesn't matter how many splits it takes, doesn't matter how many like how whatever the witchcraft they do to prop up the stock. At the end of the day, it's gonna follow the trend. Everyone's gonna sell into the trend. That's what you're seeing right now. In
Correct.
Amazon, keep an eye out for 115. That's important, which was the highs of May 17. If we open below that,
We
I
have room
won't
down
be
to 100, right?
surprised. I won't be surprised at all if they go all the way down to like $100 to revisit the lows.
I would be another buyer of Amazon at $100, $102, but that would
You
require a
can take the risk
bloodbath in the
there.
markets.
Yeah, you
But
can
I
take
will
the
be
risk over
buying
there.
there. And again, I'm not gonna be buying weekly calls. I'm gonna be getting leaps probably, but I
Don't
will
you
be
have
buying.
shares in Amazon? Did you sell it out?
I
Like,
sell out of those. Yeah,
okay.
on Monday, as soon as the trading session opened, I made like $250. No,
Hmm.
I mean this is a convictionless market, Mario. So no one is going to hold anything. Well, we don't have certainty when it comes to the
Mhm.
Fed and when it comes to inflation.
Mhm.
So, and this is my advice for you guys. If you want to, if you're thinking about taking a swing trade or a midterm swing trade, buying Amazon now and selling out of Amazon 1 month out, making good money, think again. This markets, yeah, this market forces you to secure profits as quick as you can.
Yep.
So until we get certainty, what certainty are we looking for? Inflation coming down, and possibly, the Fed slowing the pace of interest rates hikes. But other than that, this is a market that forces you to. This is a convictionless market. So whenever you have some profit, you'd better secure them, right, Mario?
Yep. Take the risk, manage the risk. That's the
Correct.
important thing.
Correct. But
Yep.
don't expect to make. I mean, don't expect making a lot of money 1 month out. Not gonna happen, guys. Not gonna happen. Don't expect taking the trade of your lives 2 months out. Not gonna happen. It's very unlikely. So if you don't secure profits quickly, most of the trades are going to turn against you. So that's my advice. And you guys know that I am a bull. I sound very bearish, but that's the truth, at least from what I said. So take quick profits, and whenever the markets show that they start to reverse the trend, then go ahead and maybe be more ambitious when it comes to trades. But if you hold trades too long, the most likely thing to occur is the trades, turning against you. So that's something to think about. There you go, Mario. So thank you very much. We had a very nice talk. Tell the guys about your Patreon and about your YouTube channel.
I have
Once
a
again, please.
Patreon. I have a Patreon and I have a YouTube channel. Link is down below in the description. Check it out. I give daily updates on SPY. I did daily updates on
You
QQQ.
have three
And
tiers, and
three
I mean, I signed
tiers.
up for the
Yeah.
third one. Perfect. I would
Yep.
say it is too cheap, but I'm not gonna discuss about that over here. Great value,
Yep.
guys, and we have a very nice Discord chat, by the way, with with a lot of very talented people. So I mean, I
The
am
link
paying.
is down below in the
Yeah, the links
description.
are down
Check it
below.
out.
Okay, absolutely. It is absolutely worth it.
Mhm.
So, bro, thank you very much once again for joining me. And what a day we have ahead of ourselves tomorrow, right? Jesus
Indeed it
Christ,
is.
man.
Indeed
this
it
market,
is. Let's
this
hope for the
market,
best.
this is a tough market. A very challenging market. You can define this market the way you want, except for voting. So we're having a lot of fun out there. So thank you
All
very
right,
much,
boss.
guys. Thanks, buddy.
Take
Take
care.
care. See
Take
you
care, man.
guys. You guys
Peace.
have a
Yep.
nice weekend. Take care. Secure
Yep.
your profits quickly. Bye.
Take care, man.